Hey everybody, this is Chuck Marone with Strong Towns. Kind of a chilly August day here. It kind of feels a little bit like October instead of August, but we'll roll with it. I want to chat with you today about something I predicted in Escaping the Housing Trap. At the end of, I think it was chapter 4, at the end of the section about finance and financing of homes, the chapter where I get into the subprime crisis and all that, I talked about the next step, the next thing that you're going to see, the next thing that we're going to do, and that being the 50-year mortgage. The way you make housing payments quote unquote cheaper for people is to extend them out over a longer period of time. And so we're going to see 50-year mortgages at some point. I said that would be one of the solutions that was floated to this. Of course, I found that an absurd solution. I'm going to talk about it why in a minute. But this week we saw what I'm just going to call credible, or at least got a lot of publicity, call for a 40-year mortgage. There's a guy named John Hope Bryant. He runs the Hope Foundation. I can't remember what it was. He was in the George W. Bush administration. He was in the Obama administration. He's a finance guy. It's a lot about opportunity, opportunity for the disadvantaged. I have respect for him. This is not a knock on him, even though this idea is loony. He wrote an op-ed in CNBC called "The Case for the 40-Year Mortgage," right? He argued that we should, through the federal government, through the Federal Home Loan Bank, be offering 40-year mortgages to home buyers. If you want a 40-year mortgage, the idea is that you should have to take a financial literacy course, which to me was kind of hilarious, because if you took a financial literacy course that was a real course, you would realize that a 40-year mortgage is a really, really bad idea. Nonetheless, the idea is let's get the federal government involved in creating the market for the 40-year mortgage. Now, many of you may or may not know that 20-year mortgages, 30-year mortgages, these are brand new products. These were not around 100 years ago. When we went into the Great Depression, we had, if you were going to get a mortgage, you were going to get a local product. You were going to get something from a local bank, and that was going to be a financial product that was like a 3-year, 5-year, 7-year interest-only loan with a balloon payment on the end. You were going to have 50% down payment. There were a whole bunch of things that, in a sense, made it not difficult to borrow money, but made going into debt a lot harder. As part of reacting to the Great Depression, the federal government created these longer-term notes, these longer-term products. And the idea is pretty simple from a math standpoint. If you can't afford X, what if we spread the payments for X over a longer period of time? Then we might be able to make it more affordable for you. We might be able to help you get into that product a little bit easier. I'm going to say this worked extremely well during the Great Depression to get the economy going. To get us, like, in a sense, at the end of World War II, out of the Depression, right? It allowed people to stay in their homes in the Depression. After World War II, we kind of, I'm going to say, supercharged these products to get people into, build the middle class, get people into homes, get the economy going, but over time, the reason why we don't have 30-year mortgages naturally occurring in nature starts to rear its ugly head, right? We've had a series of bank crises, a series of fiscal crises, basically based around the idea of borrowing short and lending long. Whether it was the S&L crisis in the 1980s, the subprime crisis in the 2000s, or the crisis we have now. There were a couple of smaller ones ahead of that, but you get this like increasing level of crises because it is a really dumb financial move to borrow short, which is what a local bank would be doing if they issued a 20-year, 30-year, 40-year mortgage. They're borrowing short from you, the depositor, and then lending out over this long-term period of time. We go into all the reasons why that's bad: inflation, interest rate changes, all these things, these products over a long period of time. It's hard to make predictions about the future, right? We don't know what the economy is going to do, and so these products are really, really, really risky. Thus, the federal government stepping in to, in a sense, put their thumb on the scale and say, no, we will take on that risk. We will do this. We will issue these longer term notes where the private sector could not do it. The call here now is for a 40-year mortgage. And I also want to say, these are bad financial products, first of all. They're bad for banks. I mean, like I said, banks can't take long-term interest rate risk. Banks can't do this type of financial product. So what essentially you have is the federal government agreeing to take a loss or make bad financial investments on behalf of people. Fine. Maybe the federal government can do that, but when those start to permeate the market the way the 30-year mortgage is done, you see that these are financial investments that just get people in a lot of trouble. Second, they're really bad for investors. I did a video on this earlier about how in good times when interest rates are going up, good times meaning the economy's going, we're raising interest rates, investors have these low yielding notes. They would like to cash them in for higher yielding notes, but everybody who's got a mortgage wants to stay in their house because they've got a good mortgage rate. When the market is declining, when interest rates are coming down, when we're trying to stimulate the economy, those are the times when people with higher yielding notes would like to hang on to them, but everybody wants to refinance and roll over their house. So as an investor, the long-term mortgage is a really, really bad product. You get stuck with it when you don't want it, and you get forced out of it when you do want it. Okay, but from the buyer's standpoint, the 40-year mortgage is one of the most ridiculous things that you can possibly do. If you've ever seen the amortization schedule on a 30-year mortgage, you spend the first 12 years just paying interest. I mean, there's a little bit of principal that you pay down, but you pay a lot of interest. Go to a 40-year mortgage, and you're basically like a debt slave for the first 15 years of owning that home, the period of time that you should actually be paying the home off. You are, in a sense, a debt slave. There was an article I wrote about in Escaping the Housing Trap called "A Home Without Equity is Like a Rental with Debt." And basically, when you get a 40-year mortgage, you're going to be in debt a long time. Most important thing, the idea here of the 40-year mortgage is to be able to get more people into homes, right? To be able to spread that payment out further, and let's just make clear, allow people to pay more for a house than they otherwise could afford, because now you can spread that payment out over a longer period of time. In a tight market like we have today, in a market where there's a lot of home buyers or potential home buyers and not enough homes, what happens when you make it easier for people to borrow more money and pay more for a house? Prices go up. This is not going to make things more affordable for anyone. It's just going to make housing way more expensive for everyone, because now if you are like a financially prudent person and you're going to have a 15-year mortgage or a 20-year mortgage or a 30-year mortgage, and you're going to be fiscally prudent, you've got to compete against the wacko who's willing to get a 40-year mortgage and be a debt slave for the next 2 decades. You've got to compete against that person. And if you two make the same income, that person could pay more because they're willing to do something that is financially nonsensical for themselves to get into a home. This will just make housing prices more expensive. It will not make housing more affordable. It will not give access to vulnerable people. To me, it's another way to prey on poor and vulnerable people who just want to get into a home.